Here's the inconvenient truth about PE interviews. You don't prepare for private equity in general, you prepare for a specific fund with specific people doing specific kinds of deals. If your prep looks generic, your answers will sound generic too. And in Europe, where headhunters track your momentum and processes are brutally selective, generic gets you politely thanked and quietly dropped. Hi, I'm Stefan, co-founder of Break Into PE. I started investment banking at Morgan Stanley in London and moved to private equity at HG Capital. Over the past years, I've coached hundreds of candidates into funds across Europe and landed them offers at places like KKR, Blackstone, Bay Capital, EQT, and many others. In today's video, I'll give you the exact prep I would run if I were interviewing with a fund next week. Who to research, which deals to study, how to build your equity story, what to ask in the room, and how to use European market nuance to stand out. Let me start with a quick story. A client of ours, let's call him Danny, was a first-year associate in Paris. He had 2 interviews in the same week, one with a growth fund, one with a value-oriented special situations team. On paper, his technical prep was fine. Solid LBOs, tight accounting, clean paper LBO. But when we pressure tested his answers, they were fund agnostic. He could have been interviewing with anyone. In 10 days, we rebuilt everything around the funds he was actually meeting. He learned the names and backgrounds of his interviewers, pulled 3 specific portfolio deals per fund, rewrote his why us so it reflected each firm's strategy, and even got warm intros to 2 team members to sanity check the culture. In the end, he landed one offer and the sponsor told him later, "You were the only candidate who talked about our last platform's pricing power like you said in our investment committee." But that's exactly what targeted prep does. It makes you stand out. So what would I do if I were in your shoes and had an interview coming up? Step 1 is to find out who you're actually meeting. If the headhunter has given you names, great. If not, ask politely. Most will share at least the level and often the people. Once you have the names, research them like you'd research a CEO before management meeting. Look at their path. Did they come from banking or consulting? Did they spend time in operating roles? What sectors do they list as focus areas, etc., etc. Check the firm's website for the portfolio companies they're linked to. If the website is sparse, a simple search often surfaces press releases where they're quoted. You're not collecting trivia, you're building context so your conversation sounds like 2 investors speaking the same language. Alongside the people, you anchor on the deals. For every fund you interview with, pick at least 3 of their transactions and learn them properly. Start with what's public. Entry timing, headline size if disclosed, sector, what the business actually does, and then push beyond the press release. What was the underwriting thesis likely to have been? Was it a buy and build or organic growth story? Ask yourself what the risk truly set. Customer concentration, regulatory shifts, integration complexity, and how the team probably mitigated it. If you've worked on analogous companies, connect the dots. The interviewer doesn't need a Wikipedia recap. They want to hear how you think about value creation in their house style. Now, if you're interviewing in Europe, style matters more than people realize. Funds differ sharply in what they're willing to buy and at what price. Some large cap funds, like for example H&F, lean into category leading software and other high quality compounding assets, where growth and retention do the heavy lifting. Other firms, like for example Apollo, are comfortable with more complex or cyclical situations, where price is the edge and hands-on intervention is the playbook. Neither approach is superior in the abstract. The point for you is to frame your answers in their dialect. If you're speaking to a high-quality growth investor, talk about embedded expansion, net retention, cross-sell, and the structural tailwinds of the market. If you're with a value or special situations team, emphasize downside protection, capital structure, catalyst path, and your appetite for operational grind. So the fastest way to lose a room is to pitch a premium multiple story to a team that prides itself on paying 9 times and fixing hard problems. Your outside-in research isn't finished with a website. Read the fund's history and origin story. Listen to podcasts or conference clips where partners explain what they like and why. Scan press releases for fund closes to understand fund size, mandate, and geography. Check how the team is set up. Do they have many operating partners on the side? That usually means heavier portfolio engagement post-deal. Have they been hiring recently in Germany, the Nordics, Spain? That often signals where pipeline and relationships are accelerating. Map the team on LinkedIn, not for stalking, but to understand cohort backgrounds and how you could fit in. If everyone came from top-tier banks and a specific set of consultancies, you know how to calibrate your narrative. Then go beyond the fund and study the neighborhood. Who are the closest competitors in your segment and geography? And what have those funds been doing lately? In Europe, this changes country by country, and language still matters. A mid-market team with a strong DACH footprint evaluates risk differently from a pan-European large cap based out of London. A growth investor in Paris will lean into product market fit, local go-to-market mechanics, etc. A buy and build specialist in Stockholm might obsess over procurement and ERP integration. So the more you can subtly show that you understand the local texture, the realities of recruiting a German-speaking sales force, the regulatory cadence in healthcare in Spain, the dynamics of take-private processes under UK rules, the more you sound like someone they can drop into a live deal on Monday. Let's talk about your equity story, because this is where strong candidates separate themselves. You need a crisp, believable answer to 3 questions. Why PE, why this fund, and why you? For each of these questions, have 3 reasons, each prepared. Why PE should be anchored in behaviors you've already exhibited, not a future fantasy. So basically you need to convey that you already are an investor, not to want to become one. This is the key. Showcase that you have your own way of evaluating investment opportunities. And reference any prior investment experience. May it be managing your own stocks, doing investments for the University Investment Club back in the day. Key is you are already an investor and have invested. If you haven't invested any single dollar in your life, at least make sure you can articulate what makes a good investment very clearly based on your work experience. Why this fund must sound like you've been following them for months, not hours. Reference a deal, explain what about that playbook excites you, and show how your experience would be useful on day one. Why you isn't a CV readout. Understand the relative strengths you have and keep it short and sweet. And don't just say calm execution under pressure and good team player. Everyone can say that. So make it specific to you. Also, good questions win offers. Prepare 3 per interviewer that you could genuinely ask. The best questions are targeted, so test the hypothesis and invite the interviewer to talk about how the firm thinks. So for someone linked to a recent platform deal, you might ask, in your underwriting for the platform, which lever did you decide to underweight in at the entry and why? For someone who joined from an operator role, try, where do you see the biggest gap between what we assume in a model and what actually happens in the first 100 days post-close? For a partner with a country focus, how do you decide when a great asset in, say, Italy is still the wrong fit for the fund? So avoid questions you could have answered by reading the website. Aim for questions that show you've done just that and kept going. Another tip, end your question with something positive, like culture. That way you end the interview on a positive note. Now here's another key move. Connect with team members before the interview. A cold or even better, a warm introduction through a mutual contact or a short respectful LinkedIn note earns you 2 advantages. First, you calibrate the culture. Are they intense and analytical or informal and founder-friendly? Second, you can name drop also during the interview. I spoke with Marta last week about her rotation into a portfolio company. It's really great that you get the chance to also see how a company is operating from the inside, which I also believe helps you become a more well-rounded investor. So this isn't name dropping for its own sake. It's signaling that you've already engaged like a teammate. Keep it humble, keep it specific, and always thank the person also for that time. Tools can help. If you have access to research databases or deal intelligence like Merger Market, use them to triangulate details you can't find elsewhere. But don't make the mistake of drowning in data and forgetting to form a view. The interviewer won't reward you for reciting 10 press clippings. They will reward you for saying, given what's public, I guess the thesis hinged on ABC. Would love to hear how you thought about pricing the deal. Short and to the point. That's the voice of an investor. So let's turn this into a concrete plan you can run this week. Day 0, you secure the basics from the headhunt. Names, structure of the interviews, and format of the day. Plus any expectations for paper LBO, case, live modeling, whatever the process entails. Then you build a 2-page prep brief per fund. Page 1 is people and positioning. Interviewer bios, the fund strategy in your words, recent fundraising details, competitor overview. And then page 2 is deals. 3 transactions with a tight summary, your reconstructed thesis, where you see the valuation going, the value creation levers, and 2-3 intelligent questions per deal. In parallel to that, you rehearse the moves you'll actually need in the room. If there's a paper LBO, of course, practice it under time pressure. If there's a short case, practice structuring a crisp investment view in 10 minutes with a clear yes-no, a base case bridge to money, and the 2 risks you pay due diligence. If the fund works across multiple European languages and you can interview in another language comfortably, be ready to switch and keep your vocabulary investor level. If not, that's fine. Clarity beats bravado, but don't be surprised if it comes up. When you practice, practice like you play. Set a timer for 30 minutes and do a full mock. Introduce yourself in under 2 minutes, answer why this fund, using a specific deal, walk through your deal experience, pivot into your questions for the interviewer, and close with energy. Record yourself once. You'll hear filler words you didn't know you had. Compress them, go again. One more European nuance that often decides the day: fit. Not the fake, we are family fit. The real day one on a deal fit. Many European teams are tight, lean, and geographically dispersed. They need someone who can pick up a live workstream with a German CFO on Wednesday without drama. Show that you can be that person. But it's not just about confidence and competence, but also smoothness and likability. People need to like you and want to spend more time with you. On the morning of the interview, your job is to be decisive and curious at the same time. Decisive means you answer questions with a point of view, not a hedge. Curious means you invite correction and deepen the conversation when you can. If you're asked about a portfolio company and you don't know a detail, don't bluff. Say, I don't have that data point, but here's how I think about it. And keep going. Close each conversation with one sentence that ties to the fund. Look, I'm excited about how you've compounded mid-market leaders through disciplined add-ons. And actually, I'd love to contribute to that from day one. Then send short, specific thank you notes that reference the substance of each discussion. It's professional and in small European ecosystems, remembered. So let's recap the essentials. First, prepare for people, not just a firm. Know who you'll meet, what they've done, and speak to them like peers. Second, build a deal spine for your prep. 3 transactions per fund, each with a reconstructed thesis, value creation plan, and 2 intelligent questions, at least. Third, craft a fund-specific equity story so why PE, why us, why you feels inevitable, not improvised. Fourth, do outside-in research from history, fund size, portfolio strategy, team, competitors, and connect it to European realities like country focus, language, and deal style. Fifth, reach out before you show up. A warm, respectful conversation with someone on the team calibrates your message and you can reference it later on. It gives you credibility that you're serious about the firm. Sixth, remember to have your fundamentals on point. Mental math, strong communication, technicals, commercial acumen, modeling skills, all of that matters. So what makes Europe unique is how local it still is. Even at global firms, processes are smaller, teams leaner, languages matter, and headhunters remember momentum. The upside is that targeted preparation pays off disproportionately fast. If you show you understand the firm's style, the region's realities, and you bring the humility and control to execute, you will feel different from 90% of the room. And that difference is what converts interviews into offers. As always, make sure to like and subscribe for more insights on how to break into private equity in Europe. If you don't want to leave anything to chance in your private equity prep, head to breakintop.com and book a free strategy consultation with our team. We run a short diagnostic, No fluff, show you exactly where you stand and map the fastest path from the desk you're on to the offer you want. I'm Stefan from Break Into PE, and I see you in the next one.